I check it. For the last 30 years, Japan's been running a secret worth more than a milli. More than a billy. We talking trillions, okay? A silent puppet master behind global markets. Think of it like financial dark matter, invisible, but it's what juiced the dot-com boom, the housing bubble, and that whole crypto super cycle. It even has a name. Some of you probably have heard of it. I've been talking about it for years. The yen carry trade. See, remember August 2024, the yen carry trade fiasco? See, this was the money world's largest, biggest, baddest hidden hustle. And this week, it flatlined. The takeout of this operation ain't just a ripple. You feel me? You know what I mean? It's a straight up tidal wave that's about to reprice damn near every asset on the planet. In this video, I'm going to show you how the yen carry trade actually worked, why Japan just killed it, and what that means for stocks, real estate, bonds, and yes, your precious Bitcoin.
Bloomberg on the track.
So, to really get the crisis that's popping off people, you got to understand the secret engine behind it all, right? The yen carry trade. See, I feel like some of you probably remember that a lot more than you would, had August of 2024 never happened when the Bank of Japan decided to raise interest rates for like the first time by a quarter basis point in like 30 years, and it caused like a huge sell-off in the markets. Yeah, I mean, I've been screaming about that for years, but now everybody, I feel like, at least in Brigade community, y'all pay attention finally, right? But for 3 whole decades, like I said, Japan was the world's cheapest plug for money. The Bank of Japan kept interest rates at or near zero, basically cooking up the greatest free lunch in financial history. Ain't that right, Gecko? Or what?
Oh, absolutely, Chuck. I mean, it was basically the world's longest running all-you-can-borrow buffet. For 3 decades, the Bank of Japan was like that friend who never asked you to pay for gas. And now that they're finally asking for a few bucks, the whole market's acting like the free ride is over. Which, to be fair, it kind of is. So yeah, let's dig into it.
Yeah, no, I like the insight on that one, man. Appreciate you. But like, in plain English, people, listen up, man. In plain English, big money players, hedge funds, banks, institutions, basically borrowed trillions and trillions of yen at ultra low rates. They flipped those yen into currencies with higher interest rates, right? Like the US dollar. With that new cash, they went on a global fucking shopping spree. Stocks, real estate, government bonds, corporates, whole companies, and eventually fucking crypto. Like, in that wild, Gecko?
Oh, it's completely wild. I mean, it was like a global shopping spree on unlimited store credit, all courtesy of Japan. And now that the credit card bill's coming due, everyone's suddenly realizing, oh, wait, that wasn't free money forever. So yeah, it's basically the biggest financial plot twist of the decade.
It might be even more than a decade, honestly. I would say probably 2 to maybe 3 decades.
Oh, easily. I mean, we might be looking at a 3-decade-long financial magic trick finally coming to an end. So yeah, the plot twist is basically a trilogy at this point, and that's why this whole yen carry trade saga is just so fun to unpack.
You got that goddamn right. All right, well, see, that's all the yen carry trade really is. Borrow low, invest high, and keep the difference. As long as Japan's rates stay pinned to the floor, the hustle was beautiful. This invisible river of cheap yen acted like a hidden subsidy, under the entire global financial system or just system in general. You can't even measure how far it went, but we're talking trillions in flows, moving markets worth tens of trillions of dollars. I mean, just thinking about that amount of money, think about it. I mean, Gecko, visualize that.
Oh, yeah, absolutely. Just picture that river of yen flowing like a never-ending invisible current underneath everything. It's like the ultimate financial cheat code that everyone kind of knew about but never really talked about out loud. And now that the cheat code's getting patched, it's like, well, welcome back to reality, folks. So yeah, it's a wild thing to visualize, and that's exactly why it's shaking things up now.
Yeah, exactly. I mean, look, it basically it inflated every bubble that most of you can remember. Okay, the dot-com bubble. All right, but you didn't realize that. The housing bubble, right? You know, post 2008 everything bubble, basically. Meme stocks, crypto. See, everyone in high finance knew the game. Nobody wanted to say it out loud, like Gecko was just saying. The whole thing was built on one assumption: Japan will keep money free forever. That assumption is what just died.
Exactly. And that's the punchline everyone's now having to face. You know, it's like the entire financial world was partying on free-flowing yen, and now the music stopped. And of course, all those bubbles, dot-com, housing, crypto, the whole circus got a nice little boost from that secret sauce. Now that the free lunch is over, it's like the entire system is having a wake-up call. So yeah, that assumption just kicked the bucket.
Kick the bucket is fucking right, man. Straight up. See, fam? Bag Brigaders, newcomers. It's your boy Chuck Boomberg here. And yeah, this is what we do in the Bag Brigade. We educate. We talk about the real deal stuff here, all right? All right, well, look. So this week, that secret died. Literally. The free lunch is officially a fucking wrap, all right? On December 1st of this year, 2025, the head of the Bank of Japan, Kazuo Ayuda, I think is how you say it, Ayuda. Sorry if I messed that one up, fam. Gave a speech that shook the whole damn planet. Okay, he basically put the world on notice that the Bank of Japan is seriously consider raising interest rates at their next meeting on December 18th and 19th. See, the market lost its mind. Now traders are saying there's like a 75 to 80% chance that they're going to hike in December. I mean, he kind of said it himself. So why would that statistic be off? Gecko, thoughts?
Yeah, you've got it spot on. I mean, when the head of the Bank of Japan basically steps up and says, hey, free money era might be over, so you might want to buckle up, the market's going to take that pretty seriously. And yeah, traders are basically just doing the math and saying, all right, there's a solid 3/4 chance we're getting a rate hike for real this time. So it's not just speculation anymore. It's basically the market reading the writing on the wall. And that's why everyone's freaking out.
Exactly. I mean, the reaction itself was instant. There was no hesitation. Japan's 10-year government bond yield jumped to around 1.87%, the highest it's been in over 17 years. The 2-year yield hit around 1%, another level we ain't seen since '08. Okay? For decades, these rates were the anchor of the whole fucking financial world, held down on purpose. Now, well, that chain's been cut. Okay? Like literally. Think of a ship or something and like the anchor pops or whatever, right?
Exactly. It's like they finally lifted the anchor that was keeping everything stable, and now the ship of global finance is just drifting into uncharted waters. And when you see those yields popping up to levels we haven't seen since the days of flip phones and bad hairstyles, you know something real is going down. So yeah, the whole global system just lost its safety net.
Yeah, exactly. And see, this ain't some small tweak. This is the death certificate for Japan's easy money policy. It's the engine that secretly powered the world for a generation, and now it's dead, basically. So, if this hustle was so good for so long, why is it all falling apart today or now? I wonder. Think about that. What do you think, Gecko?
Well, I mean, it's kind of like the ultimate party that had to end at some point, right? You can only run the free money machine for so long before reality taps you on the shoulder and says, time to pay the tab. And basically, Japan is finally looking at its own economy and saying, we can't keep rates at zero forever without causing a whole different kind of problem. So yeah, the jig is up. And all those decades of easy money were never going to last forever. It's just that now the clock's run out and we're seeing the whole world adjust. So that's why it's all happening now.
Yeah, you got that right. That's why you're Gecko and I'm Chuck. The death of the carry trade kicks off something the pros call, the fucking unwind. And it's ugly. Venomous, basically. When Japanese interest rates go up, borrowing yen ain't free no more. All them trillions of dollars in yen loans suddenly get expensive. This puts investors in a chokehold. First, their borrowing costs are going up. Second, to pay back those expensive yen loans, they got to buy yen. But when everyone rushes to buy yen at the same damn time, the currency gets stronger, making their debt even more expensive. Sheesh! What a fucking shocker, right?
Oh, absolutely a shocker. It's basically a financial chokehold meet to doom loop, right? It's like everyone's racing for the exits at the same time, and in doing they're just making the door even smaller. So yeah, that's exactly how this unwind turns into this kind of vicious cycle. It's not just a little bump in the road. It's basically a full-on chain reaction. So yeah, that's the kind of chaos we're looking at.
Yep. See, it's like, they're trapped, right? The only way out is to sell. See, they got to liquidate everything. Their stocks, bonds, real estate, their cryptocurrency, just to get the cash to get out of the trade, right? This forced selling is a domino effect from fucking hell, if you ask me. Selling makes the price drop, which triggers more calls to sell, and all that liquidation can spark a market heart attack, literally. It's like some sleeping giant held down for 30 years just started to wake up, and we're only seeing the first signs of what it can do. You know what I mean? Think about it, people. This should all logically make sense at this point.
Exactly. It's like the beast is finally stirring after a decades-long nap, and everyone who thought they could just chill forever is suddenly realizing, oh wait, this thing actually has teeth. So yeah, it's a logical chain reaction, and once that forced selling starts, it's basically a self-feeding loop. And that's why this whole thing is about to get really interesting, in the most sarcastically chaotic way possible.
You had to throw in the sarcastic comment, didn't you? Yeah, you and your sarcasm. We're not even going to go down that road, bro. See, you want to see the first body to drop from this unwind? The first and most obvious casualty? Man, some of y'all ain't going to like this. But look no further than your friend Bitcoin, okay? In the days after Japan made that announcement, Bitcoin took a nosedive from the high 90s down into the mid 80s in just a few hours. Over 646 million in leveraged crypto bets got wiped out, fucking erased, okay? And this wasn't just some crypto thing. There were other headwinds, sure, but the timing with Japan's bond shocks is not a coincidence, people. This was the cold, hard result of the yen carry trade coming undone. I mean, right, Gecko? I mean, see, people aren't seeing this part of it.
Oh, absolutely. You nailed it. I mean, it's like Bitcoin was the canary in the coal mine. And the moment Japan sneezed, crypto caught the flu. So yeah, it's not just a random crypto crash, it's the whole house of cards reacting to that yen carry trade unwind. And a lot of people don't realize that Bitcoin, for all its digital gold hype, was basically riding the same liquidity wave. So yeah, this is the part where people start connecting those dots.
Yeah, well, it's seeming like that's the case. See, for years, they sold you Bitcoin as a shield against your money problems, something outside the system, deregulated, unregulated, whatever the fuck you want to call it, right? The last few days put a bullet in that idea. Straight up. Pew, pew. got murked. Bitcoin wasn't a shield against the system. It was one of the biggest winners from its biggest secret. See, that drop wasn't a random crash. It was a coincidence of the Japanese yields rising up. The truth they don't say out loud is that Bitcoin's crazy rise wasn't just about tech or people buying in. It was a bet on leverage, on endless Japanese money. See, when that money was flowing, assets like crypto went to the moon. Now that the faucet's getting turned off, motherfucking Bitcoin is the canary in the coal mine screaming about the sickness spreading through the whole damn system. Seriously. I mean, fucking shit, dude. Like, I'm about to blow your mind with this. I'm telling you.
Absolutely, man. It's like once you see that connection, you can't unsee it. Bitcoin wasn't some fortress outside the system. It was just surfing on that giant wave of GBM like everything else. And now that the tide's going out, guess what? We're seeing who's been swimming naked, as the saying goes. So yeah, it's definitely a mind blower, and it's all part of that bigger picture.
Yes, sir. The crypto collapse is just the appetizer, okay? The fucking sickness is about to spread to every corner of the market. Think about it. Japan is one of the largest foreign owners of U.S. government debt, holding over 1.1 trillion in U.S. Treasuries. See, when Japanese investors got to sell their worldwide assets to bring money back home, those treasuries are the first thing on the chopping block. When they sell, the price of U.S. bonds drop, and then the yields skyrocket, right? So I've shown this before. TLT, the 20-year plus bond ETF, TLT down, TNX, which represents the 10-year treasury yield, up, right? Bond price down, yield up. Yield up, bond price down, vice versa. Not too hard to understand. But, you know, that's what you're seeing. That's why the bond market's just been getting mollywopped basically since 2021. I mean, just look at TLT on a chart. Right? I mean, see, and that ain't just a Wall Street problem. No. Higher treasury yields mean higher borrowing costs for you. That's more expensive mortgages, car notes, and credit card debt for regular folks, right? It means American companies got higher costs, which means less money to build and fewer jobs at the same time, right, Gecko? The list goes on, but yeah, right?
Oh yeah, absolutely. I mean, it's a whole cascade. Once those yields start ripping higher, it's like a chain reaction that just hits everyone's wallet. So yeah, your mortgage rates, your car loans, even just the cost of doing business for companies. It all gets more expensive. And that's how something that starts with Japanese bond yields ends up trickling down to, you know, what you pay on your mortgage in Topeka. So yeah, the list definitely goes on, and it's all connected.
See, and global stocks are already feeling that fucking pressure. Real estate, which got fat off years of cheap money, is looking weak and ready for a 1, 2, 3, one hitter quitter knockout. You dig? Every single asset that was puffed up by the yen carry trade is now at risk of getting fucking slammed. We're watching the architecture of global finance here, built on a 30-year subsidiary, start to break. Think about it, right? Gecko, opinions on this?
Oh, you're spot on. I mean, this is basically the moment where you see the whole scaffolding that's been propping up markets for decades start to wobble. And yeah, real estate, stocks, anything that got fat on that easy money diet is now looking at a reality check. So yeah, we're watching a pretty big shift in the architecture of global finance, and that's exactly what the Bag Brigade is here to understand.
Yep, it's Bag Brigade or die, baby. What can you do when the whole foundation is shifting under your fucking feet, huh? Panic ain't a strategy, that's for sure. See, the first move is to get smart and understand the fucking game. That's what we do in the Bag Brigade, for reals. See, these ain't normal market swings. And any advisor looking only at what's happening at home is going to get blindsided fucking hard. seriously. In the coming weeks and months, okay, you got to keep your eyes peeled for a few signals. Think of them like your early warning system, I guess you could say. First, watch what I've been watching for years, the USD to JPY exchange rate. You can look that up on a chart. It's just USD JPY. The magic number is 155. If the yen keeps getting stronger and the rate drops below that, it's gonna put more bodies in a chokehold and speed up the asset selling like you wouldn't fucking believe. Second, all eyes are on the Bank of Japan's meeting, December 18th and 19th, as I mentioned earlier. If they really do hike rates, it's a confirmation. The unwind is officially policy. It ain't just fear any fucking more, okay? Third, keep an eye on the U.S. Treasury market. If Japan keeps selling, U.S. yields will be forced higher, and that puts the brakes on the world's fucking economy. See, people, if you don't understand the bond market, you ain't gonna get anywhere in this game. See, that's what you got to understand. Bonds mean just about everything when it comes to this. It is our debt. Literally, it's that $38 trillion of debt we have in the United States. It's all bonds, basically. Gecko, thoughts?
Oh, you hit the nail right on the head. I mean, bonds are basically the backbone of the entire financial system. So when that backbone starts shifting, everything else feels it. And you're absolutely right. Once those yields start climbing because Japan's offloading treasuries, it's not just a Wall Street headline. It's going to ripple through the entire economy. And that's why keeping an eye on those signals is key. So yeah, you've laid it out perfectly. Keep watching those early warnings and you'll be ahead of the game.
Yep. See, y'all better start listening to Gecko, man. He knows what he's talking about, bro. Straight up. Now, so we are watching the end of one of the sickest financial hustles in history, if you ask me. Fucking smart as shit. For 30 years, fake low Japanese interest rates pumped up a global boom and inflated damn near every bubble we've ever known. That era is done. The reversal of this multi-trillion-dollar yen carry trade ain't just another market cycle. It's a whole new world fucking order, if you ask me. Bitcoin moving with the yen wasn't a mistake. It was a fucking confession. It showed us how connected and fragile this whole financial system really is. The secret's out. The engine, it's dead. And the bill for the 30 years of free money is coming fucking due. The only question left is, are we watching the slow motion death of a monster that was hiding in plain sight this whole time? I mean, I don't know. See, if you want to stay ahead of this mess instead of getting run over by it, do the YouTube things. You know what I'm saying? Hit like so the algo stops feeding you hopium and hype. Subscribe to the Bag Brigade if you want the breakdowns that actually connect the fucking dots. Drop a comment. You know, I'd love to hear what you got to say. Is Bitcoin a hedge or just leverage on global liquidity? And if you want deeper real-time breakdowns while this yen carry trade unwinds, pull up to the Bag Brigade Discord community. We don't do alert cults. You know, we teach you how to think and make trading decisions and investment decisions on your own. Anyways, Gecko, any last thoughts for the Bag Brigaders and anybody you knew who's watching right now and what we just went over to sum it all up?
Absolutely, Chuck. I think you wrapped it up perfectly. If there's one final thought for the Bag Brigade, it's this. We're stepping into a new era where understanding the hidden plumbing of global finance is your best defense. So stay curious, keep your sense of humor, and remember that we're all about teaching you how to think, not just what to think. And hey, we'll have some fun along the way. Thanks for having me on the show.
You got it, Gecko. Always, man. I don't know what I'd do without you sometimes. There will be a link in the description of this video for the Discord community link so you can fill out an application. Right now, we're not charging. It's free. There's hundreds of people in there. We've been doing this for 5-6 years at this point. I don't even know. But you do have to fill out an application process, and either I, myself, or one of the mods will review it. We might have some questions. You either get approved or you get denied. Whatever it is what it is. Okay. And then there's also going to be a link at the YouTube homepage. Okay. And also on our Twitter, X, formerly known as Twitter, whatever you want to call it. There's a link there too. Same thing. You got to fill out the application. That's not going to change. So yeah, that's where we get real nitty gritty with it. Other than that, yeah, I mean, especially with what we just went over, it's your boy Chuck Bloomberg, man. And I don't ask why. I ask why not. Because, well, why the fuck not? And again, like, people remember this, like, I made something out of nothing, literally. So thanks for nothing. And to all the haters in these, we had another imposter check. This is great. You filled out the application, looked legit, and within like a day or two, right? He this individual, he changed his name and profile picture to be an imposter me, right? Well, good luck to that guy or whoever that person was, because what, you don't think I have a defense system put up? Do you know how many imposter checks there are out there? There's probably hundreds of them. But he changed his name. My moderation bot caught him real quick. I mean, instantly restricted him, or this person, whatever, put him in fucking timeout, warned him, all this stuff, muted him. And by the time I was notified, and he'd already left. But, I mean, so that's what I'm saying. Like, people, they be trying to do that shit, What do you think is going to happen? Anyways, there's only one Chuck, okay? And that's me, all right? So when I talk about haters, it's really these scammy fucks out there. Be careful, all right? I tell you what, before they cross me, boy, I'm going to have to you're going to have to nail me to it, because I'm coming after every single one of you imposters that I can get my hands on. You dig? Bloomberg out. See you on the next one.
Bloomberg on the track.